The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 19th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. We do not make this one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine, 877-927-6648. Internationally, you can call us at 727-445-1044. So let's go ahead and get this show started on Rumba Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trade up 154 points at 20,816. S&P up 20, trading at 2385. Index 100 up 0.7%, up 42 points. Russell 2000 the same. That's up 10 points, but 0.75% out there. The semiconductors up big time, up $13 and change. That's 1 3/10% out there. Gold is flat. Silver is up 10 cents. Light sweet crude up 82 pennies, trading at 50.17. Leading the charge here to the upside, it is Priceline up $20 and change. Autodesk up $15, that's 15%. McKesson Corp up nearly 13. Intuitive Surgical up 11. Dynegy Inc. That's up 17%, nearly $10. John Deere up 8% or $9. To the downside, Foot Locker taking it in the shoes, the red shoes, 15% to the downside. That's 11 buckaroonies. Bluebird Bio down $5. Regeneron $4.50. Children's Place down $4. AutoZone in the red zone down 0.5%. That's $3.72 out here. Okay, so it is a beautiful thing. Market is doing exactly as you and I suspected it would yesterday. Is it not? It is. But how about the meaning of the message of the markets right now today, right this very second? Now, what we're going to talk about are going to be end-of-day figures. But if this was the end of the day, and you know how I hate saying those words out there, although I hear people say it less, thank goodness. Now it's let's get to the bottom of this. I get tired of hearing that, as I'm sure you are. But the end of the day number that we're watching is the volatility index, which is down 13% right now. It's off $2. If we take a look at it, and this is, the subscribers that attended the workshop on Wednesday know just how important the volatility index is. You can, if you sign up for the newsletter service, we'll find a way for you to get access to Wednesday's workshop out there, and you really should want to. Well, if you are interested in timing the market, and instead of calling it volatility index, fear and this or what have you, crap that you can't trade, we'll show you how you can use it to trade, right? We used it to call the bottom yesterday. Right after all that fear on Wednesday, well, not so fast, right? Then we suggested to you, watch the price. What was it, $12.90, $13.90? Let's go see if we can try to figure out what that was. It was 12 something. I don't remember the exact figure. Somebody probably knows the exact figure because they wrote it down out here. But as we speak right now today, we'll update it because now we're looking at a live chart out here, 12.17. So we suggested to you that once price got below the top of this little Bollinger Band here, 1387, that the volatility index was on its way down to the 1046 this year. That's the number today. Yesterday was slightly different out here. We said at a minimum where the VIX would trade down to would be the halfway point, which it has done thus far. That's why this 1217 area is an important area to watch. Why? because a close below 1217 is just, it is like Paul Revere riding through the stock charts on my screen, communicating to you the bulls are coming. The bulls are coming, meaning the volatility index is going to go ahead and crush all the way down into that 1046 level. Its objectives have been met as we speak right now. So now we've got to go try to figure out, okay, what else does it mean? Well, that one-day rate of change, as we just took a look at, right now it is off 13.5%. This could have more meaning than anything if it is something that is less than minus 10%. Is that how you say it? Is it less than minus 10% or more than a negative 10%? I don't know which way to actually say it. I would have gone 50-50, probably chosen one and got it screwed up. But I think you know what I mean out here. Now, why is it that I am suggesting to you that that is important? Well, because today could be called an initiation move that will lead to higher price. Now, it could just be one day in higher price, but it'll still lead to higher price. And so those of you wondering, is it going to be the bulls that are afraid to go home over the weekend carrying the long positions? Are you kidding me? It really is the bears, those ones that are left, that are going to be pondering that question between now and then. In fact, they've been pondering it all day today. That sphincter muscle on those that are left out there, it's got to be getting a little tight. Anyways, you know how to lubricate that. But let's go take a look at why is it that Stevie suggests to you that today could be an initiation move. Well, it's a beautiful thing. If we go take a look at those one-day rates of change out here, the blue arrows being the ones that are greater than 10%, you already know what those mean to us, right? Whenever you see that, no matter how much high-fiving you might be doing, as the market is going down, what are you going to do if you're short the market? That's right. You're going to tighten up your stop, or you're going to go ahead and take your profits and then go do the high fives out there. Why? Because the market either bounces or bottoms when that occurs out there. In fact, the higher the percentage over 10%, the more high-fiving you can do because it's a great day after you've closed out that trade. Now, today we're looking at, right now it's minus 13.98%. Stevie also takes a look at those levels that are greater than a minus 10% or less than a minus 10%. Somebody's got to tell me the proper way to say that just so that I can truly figure it out. But you know what I mean. South of minus 10%. Hey, that we all understand. Now, those are the green arrows on my screen out here. And oftentimes those green arrows turn into initiation moves inside the market. It doesn't matter to me how far the VIX expanded versus it's coming back down out here. They just simply do. You can ignore it if you want. You really can. My suggestion, don't ignore it. Embrace it. Embrace this wonderful information that the volatility index can give you. You see, you and I, we could care less if it indicates whether the market is complacent, this, that, or the other thing out there. Because those folks just simply don't really want to spend time trying to understand the meaning of the numbers inside of here. Now, if you take a look at when we have a greater than 10%, and then within a day or two later, you have a minus 10%, then you'd be looking for blue and green arrows. You know, kind of like the time right here on November 3rd and then on November 7th. That certainly led to a big run in the markets. Could it happen this time? Most certainly could. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So when we went to that breakout there, we were looking at this chart right here. This chart here is showing both the plus and minus 10% levels out there. And when you get these kind of what we'll call back-to-back moves out here, take, for example, we had the VIX one-day rate of change move up by 49% back on June 24th. And then you had what was called that initiation day where the VIX index dropped by 21%. That was on June 28th. That led to what? Higher price. In fact, you will see, even when you don't have back-to-back days, but you have minus 10% days in that volatility index and that drop, they lead to higher price. Almost always. On this chart here, as an example, you're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9. Today would be the 10th one. Out of the 9 previous, and I'm just going back into 2016. We could go back further. The statistics don't change. Okay, just so you know, this is not like I'm just showing you the great stuff out here. I'm just showing you the stuff that fits on my screen. So only once out of those 9 sessions did it not turn into an initiation move. Still on that very next trading session, price moved higher. Now, that day, that specific time of what we'll call a bit of a failure was September 22nd, 2016. And we are in conditions that are somewhat similar to that. So let's take a look at September 22nd, 2016 out here. I'm just doing this because I need to do it for my own edification out there, whatever in the heck that means. September 22nd, let me go back here. What was the date? September 22nd, 2016. So where were we? September 22nd. Let me see here. September 22nd, 2016. September right there. Right there. Well, okay, yeah, okay. Well, then that actually kind of works for me. Interesting. Okay, so here's the next thought process. So we know today you get a VIX index that finishes south of minus 10%. Odds favor that its initiation move, you're going to see higher price on Monday. Okay, end of story. That's the way it is. You tell me whether you want those, odds out of 9 chances, which will go from 9 out of 10 here, 90%. Or just shy of that, whether you would take that type of a move. Here's the other thing that the bulls have going for them. Then those of you that are long the UVXY, you got to ask yourself why after you take a look at this chart here. So you're going to take a look at the very bottom panel. And the very bottom panel is measuring the 10-day rate of change inside the volatility index. Now, I can't tell you why this works. I can only tell you that it works. The reason I can't tell you why is I am going to tell you why. It's because it's the pattern. Odd things happen when you have those big 10-day spikes in the volatility index that are greater than a 40% move out here. That's the bottom threshold level that you take a look at. Now, that bottom threshold level is really the upper threshold level in the bottom panel here, that red line that says positive 40. And what I want you to take notice of is each time that gets up to the 40% or greater level, what does the volatility index do over the next 10 days? It moves lower by at least 35% out there. So it moves all the way back down to the bottom, which doesn't mean that it's the top of the market or anything like that. It just means that the market continues to move higher as that is occurring. Now, you might ask yourself, how often does this occur? Well, in these in 1, 2, 3, 4, 5, 6, 7, 8, 9, and there's 10 if we go all the way back here into 2014. So out of the 10 times that this has happened in the last few years that you and I are looking at, how often does it do that? Well, in this case here, it's 100% of the time. We're not anywhere near a 35% decline out here. We're no a minus 35%, by the way. We're not anywhere near that. So this suggests that the markets could move higher for much longer than Monday, Tuesday, Wednesday, Thursday. Someone in the den earlier asked me, hey, I was calling for a top to take place today. Have I changed my mind? The answer was no. The charts have changed my mind. So I guess, yeah, my mind has changed out here. It was a target date. So you're just looking for patterns to come in. And right now the patterns are just simply saying not so fast. Now, if the not so fast is going to play out, the cool thing is, from a pattern standpoint, we're really at, I like to use that word every now and then, inflection point. We're really at a cool point in time, even at 1:23, maybe 1:30 in the afternoon out here. And you might say, well, what do you mean, Willis? Well, what Willis means is, if we just take a look at the yen Q, which is likely going to be the strong dog out here, when it made its bottom back on Thursday morning, yesterday morning out here. The time was about 6 o'clock in the morning. If we just simply do our wave counts from that low, then what you will see is at about 11:30, you got to the seventh wave move. Now, we can get to seventh wave in two different ways out here, because you see there was a fourth wave right back here at about 2 o'clock in the afternoon, 3 o'clock in the afternoon yesterday. Market moves down just a bit. We start doing our second count out here, and you can see we've got two seventh waves out here. So this says to you, and oh no, it's already been taken out. I take that back. What am I smoking out here? Hey, good. That's right. It's already been taken out. It's already recycled. We already have our answer. Earlier when I took a look at it and I had this chart up, I didn't pay attention to the last the 1 o'clock session out here. Already taken out. So that's really a good indication that that this thing's going to just simply continue. This thing being the NQs out here, are going to go for their highs. Now, there's some other areas that we'll want to watch, some other price points, but the volatility index, and you really want to see the close, right? If we don't have a negative 10% or less out here, well, then that changes things up. I've just got to go with the information that's on my screen as we speak right now, and we can make the calls, and then we can say, okay, here's where all bets are off. You take your money back up, and not really money back off the table, but it does change the landscape of the game out here. And I don't know how the market is going to finish at the end of the trading session. Thank God I didn't say at the end of the day out there. That would be a penalty. That would put me in the penalty box if we did that. So what else is it that we're going to look at? Well, we're going to watch the price point of 56.82 1/4. We're going to watch 23.87 1/4 inside the ES Mini. We can watch 28.44, 20844 in the YM. But you get a close above 23.87, 56.82 in the NQ out here. It says you're going back to the highs. You may not like it. I can't control what you do or you don't like. It's just simply the message of the markets out there. It means all kinds of resistance that should have held will not have held. Now, what if price closes below these, and then we have something less than a negative 10% rate of change? Well, the landscape changes. And what takes over is probably this. What takes over is we likely see the New York Stock Exchange reject Stevie's red line. See, we're trading right now just slightly above it. We're looking at the NYSE right now, just slightly above the red line. So we got to say it's priced right at about the 11,555 area. If you close above that on the New York Stock Exchange, well, that's just another confirmation that the market wants to move higher out here. You got a price oscillator, it's above zero. Your price oscillator will have turned up. There's nothing more bullish than a rising price oscillator above zero. Pretty simple. You go test the shooting star from back here, in the early part of May. But if that doesn't happen, if it closes below it, if we have something that is north of minus 10%, well, we'll take a look at the next chart out here that says, guess what? This could be the day to sell. Yeah, both sides of the trade. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Somebody, a listener, not just somebody, a valuable listener, sent in a question and asked, what was it about Wednesday's action, Thursday's open, that were reasons to go ahead and go along the market? How do you know it was a bottom out there? Now, I can't go through everything. I mean, I can, but I'll just give you one thing. just simply because we focus so much on the volatility index out here that can assist you with that. And we've already taken a look at 2 or 3 things that would do the same. But I'm just going to blow up. This is here just looking at the data feed. And why do I have like a double printout here? That doesn't make a lot of sense. Let me get rid of a couple of things. Delete this just to clean up my own sheet. There we go. So what I really want you to focus on is the following. On Wednesday, when the volatility index closed, here was the closing price. It was about $15.59. And what subscribers knew the following morning was that the spot volatility index was way out of whack. Now, when I say out of whack, it's about $16. We're going to call it $15.59, and the closest futures contracts were all well underneath that. This case here, it was due. Actually, we still had May's futures contract was still trading into Thursday morning to yesterday morning. You've got June, July. In any event, the spot volatility index being well above its futures contracts, that is not proper alignment. That is, not only do you need a chiropractor, but you're going to correct yourself out here. And you're going to correct yourself one of 2 ways. Either the futures contracts don't know what in the Sam Heck they're talking about, which is not the case, or the spot VIX index has just simply gotten way out of whack out there, and that's what happened. It got way out of whack, and so now it's just getting back into whack, so to speak, which it is. We can see it's trading below all of the futures contracts out there, so things have gotten aligned. But watching where it trades, where it closes below, utilizing that Bollinger Band is very important. So I hope that helps answer your question as well. Another way that you can spot or play in the game of liar's poker out here, which is really what you're looking for, those types of divergences in the market. So I mentioned the New York Stock Exchange, and if price can close above its oscillator unchanged line, and we're trading basically like right on it, looks like about 11,552 is actually the number out there. If it closes above it, says the market wants to move higher. Just confirming what we spent the first half hour taking a look at. But if it doesn't, and I have to always look at both sides of the trade. You always have to look at both sides of the trade, right? Either you look for the piece that maybe you're missing out here, or you're looking, what is it that you might be missing? Well, here's the most troubling aspect about the markets as we speak right now. Now, I'm not saying that there's not some other ones from my perspective, and we looked at this chart here yesterday, and that is that when I go ahead and I adjust the advanced decline line information, the summation of that, and I create what we'll call an adjusted ratio, it has very cool pattern tools for us to look at. And we really take a look at that zero line. You know how much Stevie loves that zero line out here. Well, we're well below that zero line as we speak right now. As of yesterday's close, minus 100.97. Let me just say this. There's no possible chance for that line to get above zero today. Nil. It is impossible. But what we can use as that guide is Stevie's red line above. Now, these numbers here are going to be a little bit more harder to read. That's why we took a look at it on the larger chart just earlier. But if price closes below this, Stevie's red line, this is still below zero. I can tell you that the bulls are absolutely not out of the woods. And the prognostication that today could be a top could really be it. So what do? How do you trade it? Steve, you can't take both sides of the trade here. You're not being very helpful. So let me give you something that's very helpful. One, I don't suggest being short right now in the markets. You don't need to. There's no information right now that says you can take a high probability trade or what have you, but be careful carrying it over into the weekend if you go above some of these other levels that I gave to you. All you have to do is really wait for Sunday. If we're right, and the market is forming a top, and let's say it's today. Obviously, you can go back and say we made a higher high, a couple of days ago. This is the top that will last for more than a week, more than 2 weeks, more than 3 weeks, more than 4 weeks, maybe 5 weeks out there. So if that's the case, if it's really going to last for more than a few days, it's not just a one-hit wonder, then all you really need to do is just sit on the sidelines and wait for confirmation, right? Which could certainly come Sunday, Monday. that would then give you the information that you need. So it's important, I believe it's important, to be able to take a look at both sides of the trade. And at today's close, we'll have a lot more information out there. Again, in summary, you get that somewhere south of minus 10%. You're going to see a bounce up on Sunday night, Monday morning out there. That is likely the scenario. We could still have this zero line failure that would occur. You've got an initiation move 9 times out of 10, or we could say maybe on Monday, 8 times out of 10. That's still a good probability. It turns into higher prices inside of the stock market. So hopefully all of that information helps you in analyzing the stock market. Now let's go take a look at something else. We got to go take a look at someone else. Otherwise, you're going to fall asleep. I doubt it. Okay, what do we want to go take a look at next? Let's go take a look at your favorite currency pair and mine, and that would be the Japanese yen out here. So as we go take a look at it, we'll call that up on the screen here, and we're going to take a look at 4 different market profiles, try to get a feel for what it's doing out here. Remember, in this case, for the yen that we're looking at, it's found substantial resistance. Hasn't changed since this morning's newsletter, subscribers. And you know what action we took as a result of the resistance that it found. That resistance is still in place. You might say, well, what resistance are you talking about, Steve? Well, the resistance is old support on the daily chart. Panel number 1, 2, 3, 4, if you're counting from left to right. If you count from right to left, panel number 2. And that being the price level of 111.78. If it finds resistance there, likely this currency pair is headed lower, meaning that you would then see gold move higher or silver move higher. We can see on the weekly chart, this is going to be our first close in the last couple weeks below a trend line. So that trend change is no longer. It's null and void. Doesn't exist out here. Would suggest to you and I that the yen is going to pull back to 108.11 or 108.13, 108.87. That then should be good for metals. Maybe it breaks through that area. I don't know, but that should be good for metals out here. And you can see we have resistance on the 240 as well. What hasn't done is gotten down into the support zone. I don't anticipate we'll see that today out here. Maybe we see that on Sunday or Monday. You get above 112.04, that would be bad news bears for the metals out there. So that's what's going on in that currency market. If we go take a look at gold and silver specifically, we'll go ahead and take a look at that. We'll use Stevie's Etch-a-Sketch, his synthetic contracts out here. And as we take a look at gold, what do we know about gold for the week? Well, we know that gold is back inside the weekly market profile. 1247.30 is all it has to close above. If you do that, where do you go in price, Steve-O? Chances are you go to 1277 and then $10 higher to 1287. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go back and take a look at what do we want to look at next out here. Give me a moment to get back to scratch. I don't see any emails that have come in. I don't see any requests inside the Tiger's Den, so we're just free to roam the charts out here. Let's go take a look at Apple. Let's go take a look at the Apple Wonder 153.57, trading up $1.03, 0.7%. Apple is, where's Apple headed to? Well, it's headed back to its Apple cart. It's headed back to the top of its daily profile out here. Right now, it's at the point of control, so it's pretty comfortable at the 153.60 level. You're trading 153.56. This is going to go head back and tag the 155.13. You get above 155.13, well, especially if you're coming into that level with more than 26 million shares, that would be another bullish leg up inside of Apple out there. Let's go take a look at. I don't know what else we should look at something different. I don't know what that different is. Let's go take a look at some individual stocks. How about that? Shy of any questions or requests in the den or by listeners out there, let's just go take and surf around and take a look at some individual stocks for the next 7-8 minutes. See if there's anything that we can learn here. Let's go take a look at Priceline. Up 18 buckaroonies. Trying to get back inside of its daily profile that formed 3 days ago. Right now, that's resistance. Probably is going to be resistance, that being 18.13.35. So we can make the case that Priceline ought to get down to test the 17.52 level. That would be the bottom of its weekly box. That actually is a brand new weekly box that formed this week. Now, that is a bullish structure. We say that because it has a point of control that's closer to the bottom of the box. So that should be some PDG, pretty darn good PDGS, pretty darn good support level, PDGSL, if we're going to really go with the acronyms out here. So it's in resistance. Now, if it can't close above 18.13.35, you're at 18.14 right now, then price could easily bounce up to 18.38. That is on Priceline out here. If we go take a look at Autodesk, ADSK, up 15%, gapping up. And that is a big move. This is probably at all-time highs, but let's just make sure. Let's put on a monthly chart. And, yeah, looks like it is. So Autodesk is just a cruising. Cruising to where is the question. This is it's a monthly chart. And the most recent A to B equals CD. Let's see. That would be 39 million shares taken out with 29.52. Yeah. So you've got a confirmed A to B equals CD here. If we go take a look at its price projection tool, not the one that they give you at Progressive Insurance, but the one that we give you here at TFNN, you can see this thing has gotten beyond the 1-to-1, gone to 1-to-1.272, beyond the 1-to-1.618. So Autodesk is headed up to 125.62. Wide-ranging bar coming into its next price projection level. No bearish reversal signals that have formed ever since it got up to the 1-to-1. Says I want to continue to move to higher price. 125.62 over time is where Autodesk is trading to. If we go take a look at McKesson, MCK is the ticker symbol. It doesn't have as nice of a looking chart, but it's not too shabby out there. Let's put this on a daily chart, see what this is doing. So no island bottom out here, but into the gap that formed with some pretty big volume. So there should be some decent selling or money coming, converting the shares for cash out here. Another way of saying selling. How about that? Because there was 28 million shares back on October 28th to the downside. It's inside of that gap out there. Real resistance at about the 158.11 area. If it could close above, let's get a red line out here. We like red lines. I would say if it could close above, we're just going to have to just fall back on our normal. Needs to close above 157.54 to change the character, and then that could become support. Change the character from the standpoint it's down. It's done, headed to the downside out here. Still not a bad day with 4.7 million shares, but it needs to get above 157.54. Doesn't have to do that today, folks. It just has to do that in order to change that character. Intuitive Surgical. ISRG, nice move in it. Let's go take a look. Is this thing at all-time highs out here? Yeah, it is, most certainly. When it passed its B point on a monthly chart, 7 million shares were passed with 7.3. Son of a gun. If we go do some price projections here in Intuitive Surgical, always reminds me of Emerson Lake and Palmer, brain salad surgery. This is today exceeding the 1-to-1 level, monthly base we're looking at. So Intuitive Surgical's headed to 995.22. Don't quote me on the pennies out there, but it's headed to 995.22 next. So not a bad looking stock chart. Now let's look at some of these things here that have moved to the downside. Foot Locker, FL, being the leader today, down 16%, with a volume of 12 million shares behind it. Now, this is still the monthly chart out here. That is about as bearish an engulfing candle as we can get. It's consumed 1, 2, 3, 4, 5, 6, 7, 8, 9 months. Yes, this 1 month, we're not even through with the month out here, has consumed the previous 9 months out here. So what we've got is a consolidation pattern, maybe. Maybe we actually have a double top. We'd know if we had a double top if price is able to take out the swing point low, $50.90 from back in June 2016. 52 million shares there, only 34 million shares so far this week. So in essence, Foot Locker, well, we don't know. It's the 19th, right? I don't know how this is going to trade, but it seems like maybe it's pulling back with some lightish volume. So we're going to go with the consolidation call, and this ought to find support at about the 50-90 area, that being Foot Locker. Regeneron Pharmaceuticals, I'm glad that you asked me to look at this, because now this is a monthly chart. Pulling back a bit today, let's put this on the daily chart, because this could be a huge move, huge out here. This is the consolidation pattern, that being the yellow rectangle. And so it still looks good. Let's see, is this pullback on light volume out here today? 589. Yesterday moving, yeah. Yesterday moved higher with 1.1 million shares out here. So this thing is just testing the consolidation area. I'll make the consolidation area a little bit clearer for you. Now you can see the red rectangle. We turn off all those profiles. When you get above a level of resistance, as this has done, you come back and you test it. But in essence, until price closes back inside the consolidation, this thing wants to move to higher ground. As another test out here from a daily perspective, I would look at the candle session from November 14th, 1.5 million shares, and we attacked that with 1.1 yesterday. So no wonder. It's just trying to build up some conviction. But as long as it stays above this yellow consolidation area right around the 440, we'll call it 444 level, then what price wants to eventually do is get up into about 556. That is on Regeneron, REGN Pharmaceuticals. All right, what do we want to look at next out here? What's the last one that we want to take a look at? We don't want to take a look at the velocity shares for the VIX index. That's not going to do you a lot of good. Let's take a look at what is this here? Make My Trip. Make My Trip Limited. Who wants to take a trip and have it limited? They should have called themselves Make My Trip Unlimited. Now, I don't know what they do out here, but today it's moving lower. 934,000 shares today. Is that a big deal? Nah. Where's it headed back to? Well, it could head back to the limited price of $20.60 or $33.75 as we speak right now. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Let's go to this chart here. iShares iBox investment grade corporate bond ETF for Frank from Gloucester inside the Tiger's Den. And so there's really a couple of what we'll call competing patterns in here. As Frank pointed out to me just a few moments ago, the swing point from April 18th, 2017 at 3.6 million shares. And a few trading days ago was a pass with 7.3 million shares. And so, Frank, you're absolutely right. In A to B equals CD or lightning bolt language, this would be a confirmed A to B equals CD to the upside. No doubt about it. No other way that we can look at it. However, like with all patterns, right, we have to look at both sides of the trade out here. And looking at both sides of the trade, it means we cannot ignore other levels, as we looked at in one of the stocks earlier, where there is some real resistance. And in this case here, this is all you want to be paying attention to as we speak right now. We'll put the old red line out here. This is a trading day from November the 8th. And on November the 9th, there was 9.2 million shares. So 120.33 is a level that it really needs to close above, from your sake, if you are long this, in order to confirm an A to B equals CD to the upside, in my opinion. You then have another gap down. So you've got a gap out here that's got 11.6 million shares right around October 27. So this has got a lot of kind of selling lined up in it. So which is the pattern that's most important? I think it's most important to always take a look at how are you coming into a resistance area when you take a look at individual stocks. Each of you know that I don't at all give a great deal of weight inside the ETFs for that same kind of a thing out there. The SPYs, the Qs, the Diamonds, the Russell 2000. I found that those signals have just simply not been reliable. Inside, and this is an ETF too. I don't know what's inside these corporate bonds. So there's a whole lot of other stuff that's really going on here. So it's not even as good as a stock. But doesn't mean we ignore that information. And we're not ignoring it right now, but at this stage here, you've got some, there are some issues out there. What else is it that I could look at for you on corporate bonds as far as other signals? Nothing that I can think of off of the top of my head. So if you're in this, Frank, just watch that 120.33 area. You most certainly want to see the price get above that level of resistance out there. All right, so to finish this off here, right? Get the VIX index cascading lower again. You're down minus 16%. So you already know the game plan. There are certain areas you're going to be watching on the VIX that just simply absolutely give you go, no go zone. Well, 1216 is one of them. Does the VIX have to close below 1216 in order for the market to keep moving higher and for the VIX index to keep falling? No, it does not. That was just the first baseline target. If you close below it, 1216, then odds absolutely favor, not by like 50-50, not by like 75-25. I mean, really favor getting down to the bottom of the band, $10.46 out there. So be careful if you're holding, if you've got profits inside these derivatives out here, UVX, well, whatever they might be, consider taking the or at least expect you to feel more pressure, especially if you see it close below 1216. Now, can I guarantee it? No, but the pattern of the past, they seem to be repeating. They've been repeating basically all week long. So just focus on that, and because you got that negative 10% out there, you basically have an initiation day. Is really what the signal is as we speak right now. And then as the last thing, just watch 2387.25 in the ES, 56.82 1/4 inside the NQ. You close above that, you might as well seal the deal out there, folks. Have a wonderful weekend. We'll be back on Merengue Monday, I believe is what we're going to call it. Are we calling? No. Maybe it'll be the Bolero Monday. In any event, have a great weekend, and we'll see you on Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.